Hello and welcome. You're watching First Take here on News 9, where we break down the morning action on the D Street. I'm Suyash Maheshwari, and with me in the studio, as always, is my friend and colleague, Mr. Amit Ranjan. Now, Amit, a lot of global cues we are getting this morning. Run us through, please.
Markets, the US markets are back in the green.
Right.
They closed back in the green. So Dow Jones was up 0.24%, S&P 500 up 0.1%, Nasdaq up 0.29%. It was must be noted, that they were in the red till yesterday. The European markets, the stocks, is still in the red. It closed at 0.3% yesterday. Hang Seng opened at was down in the negative 1.79%. It continues that it's red foray into the red for a second straight day. And Nifty is in the positive though at 0.22%.
So US markets back in the green.
Back in the green.
European markets continue to
be in the
face
red.
pressure.
Hang Seng is in the red.
Right. Asian markets mixed largely.
Mixed largely.
And I think one of the reasons why we are seeing this sort of a movement in Asian markets is because the the cues have turned rather positive over the last couple of weeks. But then the levels are really elevated. So perhaps some bit of a profit booking, and that's why we are seeing correction across. In Hang Seng it's down about 1.8% as we speak. And among other global cues, Amit, the dollar index has fallen to a 3.5-month low, and as we speak it's currently hovering around that 102 sort of levels. Brent crude has picked up by about $1 or so overnight, and it's currently at around $81 a barrel mark. Now that's Brent crude for you. The US 10-year bond yields, they have fallen by around 5 or 6 basis points or so, and as we speak they are currently at 4.3%, and a sharp decline from the peak, the 16-year peak we saw of about 5% odd. The setup rather looks positive for the market, and the Nifty in fact has opened in the green, and yesterday we saw big closing above the 19,875 mark, which was a crucial hurdle. That was a point where we had we would touch, it was a touch and go point. Twice in November we scaled to those levels, but we saw a decline over there. But yesterday on a closing basis we went ahead of that, and Nifty opened about 100 points higher today, and it has also rescaled the 20,000 mark. And as you can see on your screen, as of 9:40 a.m. this morning, Nifty 50 was up 0.5%, sitting right at the 20,000 mark. Sensex on the other hand was up 0.57% at 66,552 mark. Your Mcap index has scaled a new lifetime high of 42,600. The Nifty Mcap 100 index was up at around 0.76% as of 9:40 a.m. this morning. The small cap index is also trading in the green, and it has rescaled all the losses of the last week and back above the 13,940 sort of levels, but it's facing resistance around that 14,000 zone, which is uncharted territory for the index as of now. The volatility index has picked up beyond the 12 mark. As of 9:40 a.m. this morning, it was up about 0.96% at 12.29 mark. Let's also look at some of the sectors and how they are doing, because most of these sectors are trading in the green this morning. I think the big mover, Amit, that we need to point out is of course Nifty Bank, which is currently up around 0.4% above the 44,000 levels. And in the last 4 or 5 days we have seen good participation from the banking pack, which by the way has been a laggard in the last few months, and it is the only sector that has not actually scaled a lifetime high since July of this year, whereas all other indices have at least done that in September or October. Another index which continues to gain traction is the Auto Pack. Auto Pack was up about 0.37%, and this is as of 9:40 a.m. this morning. It's also at a new lifetime high of about 17,300. So all in all, a very positive setup for the markets this morning. All the sectors in the green. The IT pack is up over 1%, by the way. That was seeing some bit of a profit booking. But let's take this conversation to Mrs. Avni Bhatt, Senior Vice President at JM Financial. Good morning, ma'am. Nice to see you as always.
Good morning, ma'am.
Good morning, Suyash. Good morning, Amit. And a very good morning to all the viewers as well.
Ma'am, we have, after a couple of weeks of consolidation where Nifty was trading in a narrow range of about 200 points and we were facing some resistance around that November high of 19,875. We have finally broken above that and today we have finally rescaled that 20,000 mark. Are the doors now open for new lifetime highs?
Yes, Nifty, to be precise, it has consolidated for 10 trading sessions within a very narrow range. And now, if you look at all the factors, all the factors are pretty positively placed for Nifty to test the new all-time high. Now, this being November monthly expiry, the highest open interest is at 20,000 call. If at all we see some kind of unwinding in the 20,000 calls, then probably by in tomorrow's expiry day, we may see new lifetime highs of around 20,200. But short covering is very important. 20,000 call writers are pretty strong as of now. So, and otherwise, even for a short period of time, not just this expiry, if we look at all the data, the FIIs have turned positive in the cash market. They are buying in the cash market. The only thing is on the leverage positions in the futures segment, FIIs are still biased on the short side.
Right.
But that is probably because we have December, on 3rd of December, we have the election results coming out. So I think they are, as of now, sitting on the sidelines. Once the results are out, irrespective of the results, once there is clarity on that front, I think the flows will begin and we should be seeing Nifty testing the all-time highs of around 20,200 in a very short period of time.
All right, so Nifty could perhaps test the all-time highs of 20,200. But another sector, ma'am, that is performing is the banking pack. Has been a laggard this year, but in the last 5-6 sessions, we have seen buying interest pick up in the banking pack and the banking names as well. And we have reclaimed 44,000 mark. As we speak, Nifty Bank is at 44,100 sort of levels. What's the view there, ma'am? Can that the Nifty banking pack take the leadership role going forward?
For any kind of rally to sustain and test new all-time highs, it is always the banking index support that is required. And since in last couple of days banking has performed, we are seeing Nifty also cross the 20,000 mark. So banking sector has to perform if at all this rally has to sustain and test new all-time highs. And as far as the levels are concerned, above 44,000, 44,200 is another resistance and 44,500 is a very, very crucial resistance. Once if we reclaim 44,500, then I think it gives you a start for a new rally altogether and will be out of the woods. But as of now, for tomorrow's expiry, the trading viewers that resistance of 44,000 is already crossed. 44,200 and 44,400. These are two major hurdles for tomorrow's expiry. And on the downside, the good part is that the support has come up. Right. And it has been gradually shifting up from 43,200 to 43,500. And as of yesterday, 43,800 put writers were also pretty strong. And immediate support is now at 43,800. The earlier resistance has now become the support level. And if at all that breaches, then 43,500 is the next support level. So as long as we, trade above 43,200, which is the 200-day exponential moving average, I think we are going to slowly and steadily head towards the new lifetime highs in Bank Nifty as well.
All right, that's a view on Bank Nifty. Now shifting focus to individual stocks. Ma'am, one of the stocks on my radar is Tata Motors. Now, ahead of its listing, the stock has seen a stellar run. And, yesterday and even today, we have scaled a new 52-week high, rescaled the 700 mark. What's your view on Tata Motors? Is that a stock that, perhaps someone can look into if they have not gotten Tata Tech?
Okay, so Tata Motors, we are going to look at it from two different angles. One is trading perspective. So from trading perspective, again, for tomorrow's expiry, there's a huge call writing position at 700 call for the November series. So probably for a day or two, it may, kind of consolidate around the 700 mark. But positionally, from investment point of view, the stock is pretty well placed to test almost levels of around 800 to 850.
Wow.
It is a stock to keep in the portfolio. So a positive view on the stock. The supports have now moved up to the breakout level of 685. So that's the support you should be watching out for. And it's a stock you can buy on dips up to at around 685 or once we see the breakout above 703.
All right, buy on dips and wait for a breakout above 703 for levels of 800 nearly. Ma'am, another stock in the news is of course Zomato. I'll get to you on the stock later, but Amit, what's the buzz about Zomato?
Okay, so there's news from across the border, China. Alipay, which comes from the Alibaba Group, which was founded way back in 2004.
Right.
It's a online third-party mobile platform, trading platform. Now, Alipay is likely to offload as much as 3.4% stake in the food delivery major Zomato. It's a block deal. A total of 29.6 crores of shares will be sold by Alipay at a price of 111.28 a piece. This is according to sources. What will happen is once the sale kicks in, another thing that will kick in is a 90-day lock-in period on the sale of on the trade of shares. Now, my question to you, Avni, is what do you make of Zomato? Good time to get in?
And I mean, the kind of rally we are seeing 4%
yes.
today, but it was, you know, the returns were muted in the last 1 month or so after hitting levels of what, 125, 126. We had seen some profit booking take place, but interestingly up 4% again today. What's your view, ma'am?
So Zomato, if you see today's movement, it has almost reclaimed the last 4 days fall, and there's a huge convergence of different moving averages, 20-day moving average, 10-day moving averages at 116 levels. So today, in case if it sustains above 116 and also closes above 116, I think the stock is pretty well placed to move back to the levels of 125 to 126. The 200-day moving average of 110 should be kept as a stop loss. One can enter into the stock because it is sustaining well. And I think the volumes also in the first few ticks, the volumes have also picked up. So my view is that it should sustain above 116 level. For intraday trading, one can keep a stop loss of 116. Otherwise, for investment purpose, I think 1110 should be the stop loss with which one can enter into the stock.
Okay, stop loss of 1110 for long term. Ma'am, before we let you go, your top 5 picks for the day, other than Zomato, if that is one.
So from the picks, I am going with the counters, which are all different stocks from different sectors. First bet being NMDC, which is from the metal sector. The stock moved up quite a bit. After that, it consolidated for a few trading days, and now the stock is again on the up move. So 180 to 181 is the buying range. Around that level, one can enter into the stock for a target of 200. This is a trading target, and keep a stop loss of 175. The risk reward is pretty good in this stock. The second stock would be Titan. It's a no-brainer with record weddings happening in the coming few months. I think stocks like Titan, Kalyan Jewelers, anything related to the marriage season are going to perform. So Titan is my second pick. You can enter at around 3440 to 3445, keeping a stop loss of 3375 for a target of 3650. The third stock is from the auto ancillary sector, which is the Apollo Tire. Now, if entire auto pack is looking good, if you look at the stocks like Tata Motors, Hero MotoCorp, even Maruti is again on an up move, Bajaj Auto, they have all performed well. So auto ancillary has to follow, and Apollo Tire will be our pick from this sector. Between 418 to 422, one can enter into the stock, and for a target of 440, keeping a stop loss of 410. Since we are expecting a good move in banking sector also, one of the picks which has given a good move and which is showing signs of breaking out is CUB, which is City Union Bank. You can enter in the range of 147. for a target of 153 and 157. These are the two targets, keeping a stop loss of 143.5. So this is again a very good risk reward ratio. One stock that I have on radar, which is showing some signs of profit booking, or not showing signs of good buying strength. So, which is Alchem. Now, Alchem, it's a conditional call. One should be selling only if it goes below the range of 4555 to 4560. So, once it enters below 4560 level, you can initiate a short position in this in the futures. So, these are spot levels. One can enter in the future segment accordingly. And the stop loss on the stock would be 4625, whereas the target would be 4380.
All right, those are the picks from Avni Bhatt, short-term trading ideas. Thank you, ma'am. Appreciate your views. Thank you for joining us here on First Sec.
Thank you.
But Amit, before we move on, let's also keep a track of how markets are doing. You know, Nifty is holding on to those 20,000 sort of levels and hovering around that, just around that. And as you can see on your screen, if we go to that chart, Nifty is up 0.57% above the 20,000 mark. Sensex is up 0.5%, holding above 66,500 levels. Nifty Mcap 100 is just about 50-60 points shy of its day's high of about 42,644. It's currently at 42,588 sort of levels. The small cap index is also pretty much holding to the morning gains, up 0.5% at 13,944, just about 40 or 50 points shy of its all-time high levels. Volatility has spiked by about 2%, and India VIX is currently above the 12.4 mark. But with that, let's also welcome Mohit Gang, co-founder and CEO at Moneyfront. Hi Mohit, good morning.
Hi, morning Suyash.
Now, November is turning out to be, one of the best months, actually the best month if you look at returns on Nifty in 2023, and we have rescaled that 20,000 mark. And, most of the run-up has been on the back of global cues, but over the next 5 months, the focus will perhaps shift to domestic, cues, and, the biggest, of course, being the elections. So, for the medium term, Mohit, what should be the strategy for retail investors from here on?
Hi. So look, I think the momentum has been terrific in the month of November, not just in India, but US markets also. If you see the kind of rally which S&P and Nasdaq has had, it's phenomenal for the month, right? And going into December, I think the momentum carries forward. There is strong positive commentary all across in the market. The consumption story is going fairly strong in the market. On the Indian markets, the FIIs are back, which is a very good, healthy, positive sign for the markets. FIIs who were shunning away the Indian market for a fairly long while have been back in a robust way in the month of November, and the DIF flow doesn't seem to taper down. So overall, I think the construct is very positive. There are few events to be watched, as you rightly said. This Sunday will bring the outcome of assembly elections, and then it will lead us directly to the general elections in the month of May in 2024. Leading up to elections, look, honestly, I think the market will always be in a frantic mood, because there's a lot of government spending which is happening. There's a lot of money being poured out on the consumption side, and so on and so forth. But the assembly election results this Sunday, I think, are going to be very crucial. It will kind of give us an indication as to how tough the fight is going to be for the general elections. Not that the results will give you a clear indication as to which way the air is moving, but it just gives you as to how much of a contention or how much of a contest it will be leading into the main elections, right? And how close that could be. So yeah, overall, a few things to be watched out. This week also we will have commentary from Fed chair out on Friday. So I think that's also something to be watched out, basically. So I think those are all the triggers, but the momentum in the market is fairly robust and strong. And I think it'll be a brave man's call to go against the tide on this market.
A brave man's call to go against the tide in the market. Mohit, as we speak, IREDA, Indian Renewable Energy Development Agency has finally listed, and it's listed at a premium of about 50% at 56% actually, at about 50 rupees a share, ahead of what the street was expecting. You know, street was pegging the premium to be around 30 to 35%. What should one do with the stock? Hold for long-term gains, or perhaps book some profit at this point in time?
Oh, absolutely. I think this is one of those phenomenal classic listings on the stocks. And I think we discussed this stock at your show itself, where I said it's a shouting buy, Suresh. So, look, I honestly continue to maintain that call. I think for a long-term investor, there's nothing wrong in holding this stock. It's in a very, very niche zone of green financing, right? And the
Right.
government's target in this area are massive. By 2030, I think the imprint is going to be fairly large, and this is one of its kind company. Though you can always contest and say that the that the financials of PFC and REC look much better, but I think in terms of the whole construct of the way it finances and the way this particular segment is likely to grow, and the focus area of the government is clearly out here. I think it's a long-term hold for investors. Yes, but you have made decent gains on listing. So for a quick trader, perhaps they might want to trim out the position, but for a long-term investor, I think it's a good hold. I think even at these levels, the stock is not fairly expensive. At around 32 level, the stock was valued at 1.2 times book. Even at 50 price or 56 kind of a thing, it'll be around 1.8, 1.9 times the book, right? So it's not fairly expensive at these levels also, but it is reasonably priced now.
Good morning, Mohit. I'll drive your attention to another company in contention for a long time now, in talks also, in the news, Adani. And now their stocks today, as we speak, all of them are up. Adani Green is up almost 2.5%, Adani Power 1.6% up, Adani Enterprise 0.7%, Adani Ports as we speak is over 0.5% up. Now, Adani Group stocks have collectively added 1 lakh crore in market cap, with the group stocks surging almost as much as 20%. First question, what according to you has led to this rally despite everything that's happened with Adani?
Yes, I think it's fascinating the way the stocks have rallied in the last 2 days. Honestly, I think the main trigger is the Supreme Court remark or the judgment, which is not the judgment per se, but the observation the Supreme Court has made, which is that it is very difficult to rely credibly on the 2 reports of the short sellers in the US market, which is the Hindenburg and the OCCRP report. I think the bench has clearly maintained that it is very difficult to credibly rely on those 2 reports. So I think that's a very, very big positive trigger, right? And even the SEBI reports have been submitted to the court. I think barring 2 instances, rest everything else has been submitted to the court, which I think are still under investigation. But it looks prima facie that there is nothing big or material which is likely to come out of this entire investigation on the Adani Group stocks and the reports which were circulating then, which in itself is a very big positive trigger. I think there were a lot of short sellers in the market and they had to cover the positions, and which is what has led to the phenomenal rally last as in yesterday, right? Because I think a lot of short sellers wanting to cover out in itself led to a good short squeeze, and the stocks bounced back. So I think all in all, yes, it looks set for the group stocks now. And now from here on, I think the performance and the underlying stats will matter. But yes, the big clouds which were hanging over the stock, I think are more or less done away with.
Mohit, every time we have spoken to you also about this talk on our bulletin, you have advised that to basically wait and watch. Would you give the investors the same advice now also, or is it a good time to get in? And which ones do you advise are the better ones in the Adani stable?
Look, honestly, I think this is a little sensitive stock in terms of the triggers which propel the stock. And per se, honestly, individually speaking, I kind of stay away from stocks which are a little more politically sensitive or are considered so by the market. Because the trigger points of those you can never fundamentally assess, right? So if there is something which is happening on the election front, something which is happening politically, something which is happening otherwise also, I think leads to a big trigger or a big drawdown in the stocks per se. So it is very difficult to call out these stocks fundamentally. But yes, I think per se, if you ask me, I like Adani Ports. That's a good one, uh, uh, and the cement company Ambuja. Yeah, so I think those are two parts of the overall pack which I fairly like, honestly. But again, as I said, the disclaimer being, I'm not a big fan of stocks where anywhere there is a linkage, there is a political linkage associated with those kind of things.
Uh, Mohit, another news that is doing the rounds globally is the passing away of Mr. Charles Munger, who has been a long-standing proponent of value investing. Now, today, in the days of investors riding the waves and on rallies, where do you see value investing stand today as the legacy that has been passed on by Mr. Charles Munger?
Oh, look, I think honestly, it's a big loss to the world of investing per se, and I think Charles Munger was one of those iconic brands of investing, which are very difficult to find and very rare to find in today's age and era. I think those two gentlemen out there sitting in Omaha propagated a very different branch of investing, which is followed world over, which is actually taught world over in schools, in colleges, as investment lessons and in investment books. How much of it is followed on the screen is still very difficult to say, because markets for last 2 3 years have become a lot of trading frenzied momentum kind of markets. But I think value investing as a philosophy, as a class, is the only true way of investing. Unless you can find or discover something which is valued at a price which is below the fair price of that stock, you're not going to make money, right? And which is what those two gentlemen out there have been teaching for their lives. And Charles Munger, I think, was one of those simple guys who, not just in investing, but even in life lessons, if you hear his commentary, he was very witty, very sharp. His one-liners were fantastic, right? And I think one of his biggest things was that if you keep your expectations low, you're never going to get disappointed, which is what he followed in investments and which is what he followed in his life also. His early life was a fair bit of trouble,
Right.
but I think the way he came back and bounced back is simply phenomenal. I think he would have turned 100 on the New Year's Day, but that wasn't to be. But I think his legacy will live long in the minds of all investors.
Now, of course, Mr. Munger was known for calling spade a spade and, often challenge the traditional wisdom that we see in market. And one of the things that both Mr. Buffett and Munger, they were criticized for was holding large cash positions at a time of uncertainty. Is that a virtue that has been lost on us, holding cash at a time of volatility, at a time of uncertainty?
Look, Suresh, I think it's a very interesting question, and I'm reminded of this famous movie, The Margin Call. And out there, I forget the name of the characters, but there was this iconic dialogue when he said that if you're the first ones coming out of the market, that doesn't mean that you're fearful, right? So I think the whole intent is, if you're being safe, if you're being conservative, that's your investment philosophy. It doesn't mean that you're scared or you are giving away inches or you are deviating from your philosophy, right? So I think and COVID times, I think they went fairly big on cash, and they've always been big proponents of cash calls, and that's what has made Berkshire Hathaway. Look, it has been a zero debt company all through, right? So, and they have always been big proponents of cash flow as a real strategy. In fact, in one of those Munger's interview, if you hear, he was highly critical, and he said, "What is EBITDA?" I don't know. People who don't understand balance sheets have made this term a fancy term called EBITDA, right?
Right.
So they were always big proponents of cash flows, right? And that's emanated from the way they kind of evaluated stocks, and that was their core position also at times of when the markets were overly greedy or when they thought there was a pandemic going around and so on and so forth. But I think to each one his own, but they were hugely successful at the end of the day. And I think this is what investors need to draw out lessons is, once you have a philosophy, stick to it. You don't have to chase, and there can be like 100 different philosophies. You don't have to chase each philosophy and try and get inspiration from each philosophy and try and implement each philosophy. Just master one and stick with it, through your life, and you will definitely reach where these two gentlemen have reached, or you will at least reach somewhere where you want to be in life.
That's the view from Mohit. Sir, thank you for joining us here on First Take. Always a pleasure speaking to you.
Thank you so much.
But moving on, Amit, one of the things that we have been talking week in, week out has been the crude oil prices and how they have, come off from their peak of about $96 on the Brent and, currently hovering and stabilize around the, the $20, $80 a barrel mark. And for that, let's also welcome Mr. Vijay L. Bambani, author and CEO at BSPL India. Hello and welcome to the show, sir. My first question is that oil prices we have seen has largely stabilized around that $80 a barrel mark on the Brent. Where do you see us ending the year at?
I was on your channel shortly after the Gaza war started. If my memory serves me right, it was 10th of October, and then followed it up by 19th of October. And on both occasions, I went out and said, I don't believe in the theory that crude oil prices will go to triple digit marks. And I backed it up by saying, if you give me $100 a barrel, I'm an eager seller. I will go short on crude oil. And there you are. And remember, I was talking about WTI crude, not Brent, because India does not really buy Brent here. And WTI has fallen significantly. As a matter of fact, the Dow theory states that any security that falls at least 20%, if not higher, goes into a bear market. And today you have crude in a bear market. I think the OPEC meeting on the 30th will barely confirm what I have been saying, that we are in a structural bear market in both crude oil and natural gas.
Now, sir, of course, investors are now eagerly awaiting the OPEC Plus decision on production cut, which will come out on November 30th. Do you expect another production cut from the over and above the 1.3 million barrels that is in place currently, or will they just extend it beyond the current timeline of December?
Well, rate cuts, output cuts have not really worked well. It's been proved. And I am sure I said this on your channel earlier, but there is a parallel market in commodities, especially crude oil, a little bit also in natural gas, but crude oil is rampant. And this parallel market involves ghost and shadow ships, out of date ships which are uninsured, carry no country flags. They disable their transponders, so it's impossible to track them via satellite. And delivery is given and taken in the high seas, so that there is no geographically national boundary being kind of breached here. And if at all OPEC goes out and cuts output again, without naming names, I would say that the usual suspects would be the fragile five of OPEC, who have been very prolific and chronic violators of OPEC quotas, export quotas. And they sell in the parallel market, and that will continue to happen. Because the only thing Middle East and North African nations have to sell of substance and substantial revenue incurring exports is energy or sand. Now, sand has no sale value. So to raise revenue, which they need after COVID very, very desperately, they have to keep selling crude oil and natural gas. And I include Russia in that as well.
Now, sir, India, as we know, is a net importer of crude and it benefits from a decline in crude oil prices. Now, my question is, how much would our CAD, our current account deficit, how much would that narrow by if we end at, let's say, at an average price of somewhere about $80 a barrel versus, let's say, $90 a barrel? That was actually being pegged in earlier by some analysts.
It would be a significant relief to the Indian rupee because, like you rightly said, India is a net importer, and 3/4 of our energy is imported. Now, I don't have the exact rupees or dollars at hand here as to how much India saves every time the crude oil price falls by a dollar. Because you have to understand the Indian crude basket is not moving in lockstep with the international prices. We are receiving higher and lower discounts with each shipment here. So suffice it to say that we are definitely in a sweet spot when crude and natural gas prices fall, because we as an importing nation tend to save a lot in foreign exchange.
Good morning, sir. I would like to drive your attention to the Indian OMCs. Now, HSBC has projected better earnings, and due to which all three OMCs, HPCL, BPCL and IOC, are on their 52-week high. Now, the brokerage, that is HSBC, has upgraded all the three refiners to a buy rating from their earlier recommendation of hold. BPCL price target was raised to 555 rupees from 340 rupees earlier. HPCL's target was raised to 375 rupees from an earlier target of 215. Indian Oil, along with the upgrade, also received a hiked price target of 130 rupees, up from 80 rupees earlier. HSBC in its report has mentioned that the performance of oil marketing companies has improved in the first half of this financial year, which has boosted their cash flows, and their decent refining margins are also adding on to the profits. So my question to you, sir, is the softening of oil prices have benefited the OMCs like BP, all the three that we have named, BPCL, HPCL and IOC, that have rallied 20 to 30% in just 1 month. Do you share HSBC's optimism of the target pricing hiked by as much as 70% on an average?
Well, you see, this sweet spot is only as long as crude oil prices are falling in the overseas markets, but they're not falling at the pump. You have to understand that we are facing general elections in approximately 6 months. At some point in time, prices at the pump will need to come down. So when the prices at the pump fall, cash flows of these oil marketing companies might get slightly readjusted downwards, and then stock prices, which are rallying fairly smartly, will either see the rally or the rate of climb cool down a little bit, or maybe even hit a plateau. So yes, I'm optimistic net, but I'm not aggressively optimistic, because much of the lower hanging fruits in terms of trading profits has already been factored in by the price.
So another thing that the HSBC report factors in is, according to them, post-elections, all these three OMCs will benefit from a freedom in their pricing of oil and oil products. Is that a factor, according to you, that could drive these stocks up as well?
Well, it's on my wish list, but wishes are one thing, and fruition of those wishes are another. Because oil is what I would call a multiplier commodity. If energy prices go up, everything from electricity, transport, fruits, vegetables, milk prices, etc., tend to jump. So I don't know whether the administration will allow a completely free hand to oil marketing companies to go out there and price diesel and petrol at the pump on their own sweet will. Although, like I said, it's on a wish list, but I really don't have any clue whether it will actually happen.
All right, those are the words of wisdom from Vijay L. Bambani. Thank you for joining us here on First Six, sir. But we'll move on now, and let's take a quick look at how Nifty is holding on to. And from what I understand, as you can see on your screen also, Nifty is holding above 20,000 mark, up 0.6% at 20,012 mark. Sensex, on the other hand, is also building onto the morning gains, holding above 66,500, moving towards 66,600 mark. The Mcap index has seen some softening, has fallen below 42,600 mark. The small cap index is slowly and steadily edging towards its all-time high, placed at 13,9 89, just about 30 points shy of it currently. VIX, India VIX, the volatility index at 10:20 a.m. was up 2.4%, firmly above the 12 mark at 12.47 levels. But with that, it's a wrap on this edition of First Take. Keep watching News 9.